We hear it all the time, over and over again. Why would you buy a REIT at a 5% yield when you could buy a safer bond with the same yield? We pitch real estate investment trust all the time here on YouTube, and that's an increasingly common response that we receive. The market is treating REITs as bond proxies, basically just as an alternative to fixed income investments. And this is very clear if you look at the correlation between REITs and the 10-year treasury over the past few years. They've seen a very strong inverse correlation. This naturally begs the question, why would you buy REITs yielding 4 to 6% when you could buy corporate bonds or treasuries, basically offering the same yield but with lower risk? We see 3 reasons why long-term investors should almost always avoid bonds and choose REITs instead. Firstly, over the long run, REITs have dramatically outperformed bonds. Secondly, REITs grow their cash flows and dividends over time, whereas bonds only provide a fixed coupon. And then thirdly, REITs enjoy significant tax advantages over bonds as well. Hey, this is Yussi. I run a small investment firm that specializes in REIT investing. In today's video, I'm going to explain to you why I think that REITs are far better investments than bonds for most investors, especially those who have a long investment horizon. And this is especially true today, given how discounted REITs have become. But before I get into it, can you please do me a huge favor and click the like button, subscribe to the channel. That helps me a lot to keep producing free content for you on this channel. Thanks so much in advance. So the first reason was the track record, and over short time periods of a few years, anything can happen. Bonds can outperform REITs, but over long time periods, REITs have always significantly outperformed bonds and other fixed income investments. I'll put a chart on the screen comparing the REIT ETF to a bond ETF, and you see that the difference is very drastic, and this really shouldn't be a surprise. If you buy a 10-year bond with a 5% yield, you should expect to earn about that as a total return over the long run. In contrast, even after the vicious REIT bear market of the last few years, the Vanguard Real Estate ETF, which is the biggest REIT ETF, has still generated total returns of 7.5% per year since its inception in 2004. And that was a very tough time period because we had the great financial crisis at the start of it, which was really tough for REITs. Then we had the pandemic, which again was a real estate crisis. It really hurt real estate much more than other sectors of the market. And thirdly, we had a historic surge in interest rates, which has now caused a 3-year-long bear market. So it was a very tough time period. And even through that, REITs significantly outperformed the bond market. If we now look at time periods outside of these bear markets that we just mentioned, REITs have performed really well for shareholders. As an example, in the decade starting in 2010, REITs earns average annual total returns of about 20% annually. And right, there was no bear market during this time period and everything did well, but that still shows you that bonds don't come close to REITs. And we can now extend this time period and include every crisis and bull market and go back 50 years since when REITs have existed. And you'll see that REITs have even outperformed the S&P 500 over this time period of 50 years. They've delivered roughly 12% average annual total returns, again, far superior to the bond market. So yes, it is true that REITs have performed really poorly lately, and this is hurting their market sentiment, and it's causing a lot of fixed income investors to question whether it's worthwhile to hold REITs in a portfolio. But again, if you look at long-term data, REITs are highly rewarding investments for shareholders. We think that going forward, REITs should have an exceptionally rewarding decade because they are today priced at decade-low valuations. And if we look at historic data, whenever REITs have been priced at such low valuations in the past, they perform really strongly in the future. And now I'll put a chart on the screen that shows you how REITs have performed in the past when they've been priced at large discount to the net asset values. This is the case today, and you'll see there that they have historically nearly tripled investors' money in the next 3 years. And so I don't know if REITs are going to enjoy such strong returns now going forward, but historically, whenever they've been priced at such low valuations, they have been very rewarding. And we can also look at real-life examples here. Following the pandemic crash, REITs more than doubled in value in the next 2 years. Also following the great financial crisis crash, REITs more than tripled in just a few years. And so REITs have now been in a 3-year bear market. They're heavily discounted. Warren Buffett and other very successful investors will tell you that the time to invest is when valuations are low and after share prices have crashed. That's today in the REIT sector. The second reason to invest in REITs instead of bonds is that they offer inflation protection. Bonds are truly fixed income investments, and that is they pay a flat coupon over the full course of their lifespan to their maturity date. REITs, on the other hand, keep consistently growing their cash flows over time and increasing their dividends. So while REITs may be more vulnerable to rising interest rates, it's also fair to say that bonds are more vulnerable to inflation, and The one that matters the most to long-term oriented investors should be inflation, because that's really what's going to eat into your purchasing power. Over the past 10 years, even despite the historic surge in interest rates, as well as the pandemic, REIT dividend payments have roughly doubled. Meanwhile, the payments coming from bonds have remained flat and lost significant purchasing power due to the high inflation that we've had. And then the third reason to favor REITs is that they enjoy significant tax advantages over bonds. On the surface, this may not seem so. After all, bonds and REITs are both taxed as ordinary income. But that's too simplistic, and the taxation of the two assets actually diverge very significantly. Firstly, the Tax Cuts and Jobs Act of 2017 granted REIT shareholders a 20% deduction on all the REIT qualified dividends from their taxable income. Then secondly, REIT dividends are often classified as return of capital, which is tax deferred. It lowers your cost basis, but it's not taxed as income when it's received. Then sometimes, such as when a REIT sells a property at a gain, the REIT dividend can be classified as capital gains, which enjoys a lower tax rate than ordinary income. Then, as we mentioned earlier, REITs are steadily growing their cash flow and the dividend payments, which result in capital appreciation. All of that is tax deferred as well. And so if you're getting, let's say, a 5% dividend yield, part of which is ordinary income, part of it is more tax efficient as return of capital, enjoying the 20% deduction, capital gains. But then there's also the capital appreciation part, which might also be 5%. So you get 5 plus 5, you get 10% total. But this 5% is totally tax deferred as well. So again, this makes it far more tax efficient than just investing in bonds and earning everything as ordinary income. And so given both the inflation and taxes, REIT dividends are far more attractive as a source of income than bond interest payments. And so the bottom line here is that for someone with a defined future use of certain funds, such as buying a car or a house in 2 to 3 years, then it makes a lot of sense to hold a bond allocation in your portfolio, and perhaps this will even make more sense than REITs, which are much more unpredictable over the short run. But if you're long-term oriented, it wouldn't make sense to replace REITs with bonds, given that they are far less rewarding, less tax efficient, and don't provide inflation protection. Thank you very much for your interest in this video. As always, if you want to access my full REIT portfolio, you can join us at High Yield Landlord for a 2-week free trial. There will be a link to it in the description of this video. Please like and subscribe. Thank you. See you at my next one. Bye-bye.